Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about why I spent over $5,000 on Roku stock. So I hope you guys enjoy it, and if you guys get anything in value out of this video, please repay me with a huge like. It's greatly appreciated. And go ahead and check out my course. I recently dropped the price from $35 all the way to $5. You guys will learn how to find undervalued stocks, how to use technical and fundamental analysis for your stock investing, and we have a whole segment on retirement and taxes. So make sure you guys go ahead and check it out. It's only $5. That'll be the first link down below. Alrighty guys, so now let's jump into it. Make sure you guys like the video, subscribe to the channel. Let's go. Bam. Now, yes, I did recently buy Roku stock. I spent around $5,000 on the purchase, and this gave me right around 30 shares because I bought in at $164 per share, which now looking at the stock chart, it's actually well over that, so I'm already up pretty handsomely. So now let's go ahead and talk about some fundamental analysis. So now Roku's revenue has been growing right around 49% per year, and it's expected to grow right around 50% by 2021. So in 1 year, it's about to grow 50%. So right now the company is not profitable, and they're expected to be profitable by next year. And I do think when they release that they're now profitable, I think people are gonna go crazy and the stock's gonna skyrocket up even more. That's just really just a fundamental catalyst to make that stock go through the roof. It happened with Tesla, and I do think it will happen with Roku. Same thing. So now Roku's business plan is actually pretty cool. You guys can pay monthly and you can kind of have that subscription payment like Netflix, or you guys can use the advertisement method, which is free, but you do have to overall watch advertisements, before you play a movie or a TV show, something like that. Which overall, it's really cool to see that there's a free and a subscription base, because those are both growing industries, which is great. So now another thing that's awesome about Roku is they have extremely high margins. Really what that means is for every $100 Roku brings in, they actually keep $70 as profit. So their margin rate is right around 70%, which is extremely high. If you compare it to Tesla, Tesla's margin rate is 1%. So for every $100 Tesla brings in, they only profit around $1, which is extremely low. But I do think that they are in a growing sector. I think that their margin rates are high and their growth is actually off the charts. So now they do have around $887 million in cash, which is extremely high. So that's another good thing. When a company has a lot of cash on hand, when their company kind of slows down, they can continue to actually grow the business because they have a lot of money sitting in cash, which is overall great. It's really good to see. Also, their long-term debt is extremely low, right around $90 million. That's really nothing to be worried about. Companies take on long-term debt all the time. Amazon, Apple, a lot of big companies do it because they grow their business that way, so it's really not that big of a deal. So now that's overall, let's go ahead and look at the chart. Let's do some technical analysis, so let's go. Alrighty guys, so Roku's ticker is ROKU, it's Roku. So now looking at the stock chart, you guys can see it is trading at around $186. So I am up pretty well on this overall position. But looking at this chart, let's do some support and resistance and some trend lines. So now you guys can see that there is some support here at this yellow line. This is what you call a 200 moving average line. So really anytime this stock has came in contact with it, we get buying pressure, So now we can kind of classify the 200 moving average line is an overall support line. Now there is some resistance here at around 177, 178, but I do think that we are getting a break through that resistance, and honestly, my price target for this stock is right around 250. I think you can hit that by next year. I think it's very realistic by the rate of the revenue growing, and that this company is going to be profitable by next year, or within the next 2 years. So I do think that that's going to make this chart and make this stock go crazy. Really, that's my thought process on it. Really nothing to be too worried about. No dividends because it's purely a growth stock. They don't have the money yet to pay dividends. RSI is getting into a little overvalued territory, but it's very common to see this stock trade in overvalued states. So honestly, nothing to be worried about in that aspect, but I do think that this stock 250 is my. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. Don't forget to go ahead and check out my course. It's only $5. Go ahead and check it out. So now we'll see you guys tomorrow. Take care. Bye.